Surf's Up. Learn to ride the F&O waves only on BloombergQuint with Agam Vakil.
Hello and welcome to Surf's Up with me, Agam Vakil, on BloombergQuint. And as usual, we're here to get you perspective and ideas on the futures and options space in Indian equities. So we are back at 8600 and FIIs have continued to sell. In fact, the net sell figure from the FIIs over the past 2 weeks has been at its highest we have seen this year since February. Earnings haven't helped, and of course the pressure on the Tata Group stocks following the ouster of the chairman of the board of Tata Sons hasn't made it easier for the indices to scale back up either. The expiry itself has not been very volatile, surprisingly, but traders are reluctant to commit, and this is indicated by the lower than the previous 3-month average rollover so far. So the question now is, where do we go from here? Let's get some perspective, maybe some ideas. We welcome back Gaurav Bisa, derivatives analyst at LKP Securities, to guide us through these waves of open interest. Hi Gaurav, welcome back and thank you for joining us again. And my first question will have to do with the Nifty. Where are you expecting the Nifty to go with respect to the kind of rollovers you are observing for now?
If you look at the kind of movement the Nifty has seen from higher levels from 8,700, decent amount of shorts have been seen getting built, and it's trading below the support levels of 8,600. So on a very immediate term, I expect 8,480 to 8,500 that can be touched upon in the next couple of trading sessions. And if that is crossed, that is breached on the lower end, it can test levels of 8,350 as well. So for people who want to trade the Nifty, I would recommend going short. One can initial short here, or one can go long on 8,300 put option of the November series. That can also be a good strategy going ahead. Kind of for momentum we are seeing in Nifty and the Bank Nifty, there is a good chance that we'll see some pressure in coming days.
Okay, so you were also referring to some pressure in the Nifty Bank. Any levels that you would like to take us through as far as the Nifty Bank is concerned?
19,350 spot levels are very crucial. If it closes below these levels, you can expect a 300 points drop coming in. We can retest the previous supports of 18,800 in the next 4 to 5 trading sessions, probably even earlier.
Okay, and once again, with respect to stock futures and stock options, Gaurav, do you have any ideas for us?
I would recommend going long on probably Apollo Tyres. If you get a 205 put option of the current series, if you get it around 1.5, if the current price is quoting it, one can expect a 3 to 4 rupee target coming in 205 put option. One can have a support of 50% and go long.
Okay, and finally coming down to Derivatives 101, and I once again want to remind our audiences that we are open and inviting questions for our guests. And the question for this week, Gaurav, is that what is the advantage of buying a call versus going long in a futures contract?
Good. So the basic difference lies in the approach. So what we want to portray or say that when you buy a future, the risk is quite high, substantially high. So if you buy a future at the current levels, if there's a 50 rupees up move coming in futures, there will be a 50 rupee profit that you make. If it falls 50 rupees, you will make a 50 rupees loss. So the risk rewards are very high. On the other hand, when you go for an option, when you're buying a particular option, call or a put option, the maximum that you lose in any scenario is the premium that you pay. So let's say if you have bought a Nifty call option and the premium that you pay is 30 rupees, the maximum that you lose is 30 rupees irrespective of the market fall. Even if market falls 500 rupees, your loss would only be 30 rupees. So that is one advantage. Also, you have the benefit of choosing multiple strikes. For futures, you need to buy or sell at the current price, at the market prevailing rates. For options, you can choose out of many options, say 100 points away, 200 points away. Those kind of option selection also there that can again mitigate your risk. That is why there is a difference, a marked difference between options and futures.
And that is all that we have today for Surf's Up. Thank you, Gaurav, for joining us and simplifying some of that data for our audiences. And as for you guys, do come back next week and join us for yet another edition of Surf's Up only on BloombergQuint.